Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Andy Hoffman. Andy's the marketing director of Miles Franklin. You can see all his work on milesfranklin.com, and I am very happy to have him back on the X22 Report Spotlight. Andy, welcome back to the Spotlight.
Well, thanks for having me. So much to talk about, particularly the urgency of discussing what's going on in the paper precious metal markets.
Yes, and I wanted to talk about this silver flash smash, where some people are saying it was a glitch. I mean, the silver market dropped by 6% before snapping back, and that was equivalent to what, like 8,200 contracts or 40 million in notional ounces of silver. I mean, what's your take on this? Was this just a fat finger, problem? Was it a glitch? What do you think happened here?
Well, actually, it wasn't 6%, it was 10%. And it took mere seconds. In fact, even the Sunday Night Paper Silver Massacre on May 1st, 2011, when the cartel attacked the prices on a Sunday night when China was closed, and then they claimed it was because bin Laden was captured, which was ridiculous. And on top of that, the fact that people don't even remember about that day, that by noon the next day, gold was up for the day and silver was almost up for the day when they came in with what I call the 12 o'clock p.m. cap of last resort and smashed it again, so that the narrative would fit. And basically they were just terrified of the technical breakout above $50 per ounce, which is clearly the 1980 nominal high, certainly not the inflation adjusted high that they were terrified would be broken out. And then we were already having shortages at the time. Can you imagine what kind of shortages we would have had then on that kind of breakout? So, what happened on Thursday, and I remember this whole thing, when you think about it, and I was writing about it this morning. Everyone needs to read, this morning I wrote about the ultimate precious metal high grading opportunity, meaning, you have the silver to gold ratio is near its all-time low. The platinum gold's at its all-time low. We're seeing numismatic premiums at the all-time lowest we've ever seen them before. But in it, I was talking about this, flash crash. Look, the whole thing started, not Thursday, the whole thing started on Monday. Remember, it was a couple of weeks ago, we had the Fed with their hawkish hike. Made no sense at all because the economic data has been terrible. They subsequently attacked precious metals, as they do, and it was kind of sitting around in somewhere up a bit for the year, but certainly no in real danger until we got to Monday, the day of the half day of trading, the day before July 4th holiday, when for absolutely no reason. The only news that came out last Monday was the bloodbath of May auto sales that came out, and construction spending unexpectedly plunged as all the numbers came. And the next thing you know, silver's down 65 cents and gold's down $20 on a day where there's nothing else going on. That's when it all started. Now then, of course, Tuesday was off, and as people, gold people, silver people know, the COMEX puts out their Commitment of Traders, or COT report, every Friday afternoon with data that's as of the previous Tuesday. So essentially, since Tuesday we were closed, it was the data as of Monday. And on Monday, and what we saw there was massive short covering, which has now been going on for a month. Because keep in mind, the commercials have never, that's the cartel, have never been long the precious metal markets. For 15 years in gold and pretty much never for silver. We're talking about at least 30 years. And right now, as of last Tuesday, meaning before what happens, the flash crash and all, they were at their lowest level of short position since the ultimate bottom of precious metals in December of 2015, almost to the week. And remember, part of the reason that I believe they also needed to start this big smash around this, Fed rate hike, which was complete BS. There was nothing hawkish about it, and there's nothing that they've really done that's been hawkish. Was both gold and silver in the middle of June were on the verge of breaking both their 5.5-year downtrend lines, going back to the 2011 raids, and their 200-week, not 200-day, 200-week moving averages. So kind of like in 2011, they were both on the verge of major technical breakouts, which clearly would have had significant ramifications, with traders coming back in. So that started then. And then all of a sudden, as that's happening, that's when the commercials start to massively start covering their shorts. What a coincidence. And so again, on July 4th, the data that we had showed that they were at their lowest level of short position since the bottom in 2015, which happened to be, by coincidence, or not really coincidence, the very week that the Fed started raising rates. Now, Then, of course, we have on Thursday night. Now, I was just reading my friend Steve St. Angelo. I'm sure you know him. He put out an article. He put out an article this weekend. I didn't even realize it because I'm not really in the mining world. And of course, the media doesn't ever, put out these important factors. The second largest silver mine in the world, Tahoe Resources Escobal mine in Guatemala, on Thursday, meaning mere hours before the flash crash, was shut down because of this bitter dispute with the government regarding environmental issues, to the point where it's very likely it may not come back online for 6 months, a year, maybe never, given how bitter this battle could be and protracted. This is the second largest silver mine in the world. A couple of weeks ago, you had some dry weather and wheat goes up 15%. Meanwhile, precious metals, you're talking about plunging production. Gold's production is going to fall 25% in the next 5 or 10 years. That's baked in the cake. And now you're talking about the second largest silver mine going out of commission mere hours before this flash crash. So that's the news that was out there when suddenly on Thursday night, again, we have the Friday morning, we had the NFP report coming out, the jobs report. Suddenly in a matter of minutes, and by the way, if you look at the chart, going back to the Sunday night flash crash or whatever you want to call it from May 2011, it's literally the exact same time. And pretty much the same amount, 10% in a matter of minutes. Someone put the equivalent of, 20% of global production on the market in the thinnest possible time. And that's not even putting it on the market. It's just hitting every bid that they can. And so maybe they're just I think that they're trying to cover their shorts in a big way. And they were signaling also that there was going to be another smash Friday morning. And again, the jobs report came out. It was another crappy report, but the headline number was better than expected. And an hour after the report, gold and silver were back to where they started. Silver had gained back all of the flash crash gains, kind of like what happened with the Sunday night massacre in May 2011. And half an hour after the report came out. And then suddenly, bam, another deluge. And of course, this weekend there's no news out. There's no negative news. And so we had, the 192nd Sunday night sentiment attack of the last 202 weeks. And then the same thing at 2:15 a.m., et cetera, et cetera. So, people are waking up right now, these traders, to margin calls. And I got to think that between what happened on Friday and what's happening this morning, I got to think the commercial short covering is enormous. And we won't find that out until Friday, of course, when that is published. But there's clearly something going on here because, look, the other news on Friday was that Japan said that the Bank of Japan, that they will monetize unlimited amount of JGBs. Unlimited amount at 0.1% interest rate. So, big money printing news. So there's clearly something going on. Andrew McGuire put out an interview this weekend where he's talking about how strong the physical gold markets are. And I think there's just something fishy going on here. We're talking about all-time low prices and sentiment and valuation anomalies. And the physical market is not changing, except the paper market is going crazy and the commercials are short covering. So it just feels to me like something big is about to happen that's going to benefit precious metals after all these years. And I just don't know exactly what's going to catalyze it.
Now, there's many people out there saying, and you're saying now that something, you feel like something big is going to happen, but many people are saying that, the gold and silver market, well, it's finally hitting bottom now. But when I hear this, I'm thinking, well, it's been manipulated all this time. Is there really a bottom? Because we've been seeing this manipulation. When you look at it, is there truly a bottom anymore because of all this manipulation?
Well, the bottom, if you say the bottom, it was in December 2015. Again, it was the week that the Fed raised rates, and gold was 1060, and silver was 1370, I believe. So yeah, that was the bottom, the ultimate bottom of this cycle. The bottom, going back all the way to 2009-10. So when we talk about it's bottoming now, it's in a process right now of trying to find a bottom, and I'm trying to say that what I see here suggests to me from a technical level, from which I put less into the technicals in the rig market, but certainly when you're talking about this kind of level of oversold on the silver market, this is as oversold as it's been in years. At the same time that the commercials are covering at their fastest pace in years, when you haven't had any actual news. That would be, you never have negative news for gold and silver, but you certainly are not seeing any now. There's none on the tape. And, it seems to me like there's something on. Look, we all know, this is the whole thing going back to GATA when I started with them 15 years ago. It's always the physical markets that overwhelm the paper cartels. I wrote a few weeks ago about how OPEC is proving how oil cartels fail. Let me look at the oil price today. They are proving what I've said all along about oil. We're in an historic glut, and as a result, it doesn't matter how much the oil PPT tries to talk up prices. Prices are ultimately going to go down because there's just too much physical oil swamping the market. And the same thing is it's the converse in precious metals. Between the fact that the physical demand is very high, where the inventories are very low, much of the inventory that's been used has been, like the U.S. government selling its Fort Knox gold and swapping and leasing. The point is that, per what Andrew is saying, there's just very little out there. Everyone should read the Tale of Two Gold Markets by Jim Rickards this weekend. I mean, he's connected to all the refiners. He said that they can't source gold anywhere. They're running 3 shifts a day just to refine what they do get, and they're having trouble finding any. And so the point is that the physical market anomaly versus the paper is going to resolve itself, as all kind of anomalies do. Now, that's why I stay away from, for instance, mining stocks, and why I have no interest in any paper markets, because there's no real physical market underlying them. The only real restriction on manipulating like stocks and bonds up is that you actually run out of stocks and bonds. But maybe they can do wash trades at whatever prices they want to make it look like prices are higher. But when you talk about gold or silver or oil, there are physical markets underlying them. And in a world of money printing and a world of declining production and a world of wars on cash and draconian government actions, these trends are only going to move in favor.
You started to say that, you feel like something is going to happen. Maybe we're already seeing something happen, because they've been suppressing gold and silver, the precious metals market, for a very, very long time. And they've been keeping an eye on that, making sure people don't, see that market moving up. Now we have the crypto market, which is gaining ground, and more individuals are, taking their funds, their currency, and investing it in the crypto market, in Bitcoin and Litecoin and, whatever other coin there is. Maybe they are looking at this saying, okay, maybe it's not the physical gold market and silver market anymore. Maybe we need to start focusing on the crypto market. And, because the crypto market, I see the crypto market as this free market, which kind of emulates what gold and silver should be doing right now, where it's continually moving up and more people are saying, hey, look at this, I should get into this, because, this is something where the central bank doesn't have control. They can't control it right now. And I'm making a return on my money.
Right. Well, okay. And as you and a lot of the listeners know, I have been more bullish about the crypto sector than anyone in the precious metal space. I mean, by far. And not just because it's going up, but because I understand monetarily what the concept is and what it could possibly be going forward. Now, I'll say a couple of comments on what you're saying. For one, right now the crypto market is not going up. It had a huge run up. It had its, Bitcoin, even starting with Bitcoin, but also all the altcoins. They had their coming out party this spring, most of it from March to June. Right now, it's in a significant downtrend. I mean, the entire space as a group has lost 25%. But when you exclude Bitcoin, which has gone down much less because it's the gold standard of the sector, it's probably down 40 to 50% or more. You look at Ethereum, the number 2, that went from, we're talking about 3 weeks ago, Ethereum was 420. Today it's 230. So it's not right now. People are not selling gold and buying cryptocurrencies. Now, second of all, the cryptocurrency space in general, when you're talking about, if you think but if anyone would think, well, it's going to replace what gold and silver are doing. And I'm not talking about going up. I'm talking about the concept of wealth storage. There's only really one, maybe two, if you count Litecoin, that have any kind of storage of value qualities at all. I mean, Bitcoin and Litecoin have finite values. Litecoin doesn't have the network effect that Bitcoin has, but they both have finite values. Almost all the other ones are centralized. There is an Ethereum Inc. essentially, and there is a Monero Inc. and a Decred Inc. All these kind of things you can get to. And as opposed to Bitcoin and to a lesser extent Litecoin, which are decentralized. That's the only thing that would be an attractive alternative to the fiat currency system, is something that the governments can't control, because governments can get their hands on a lot, like these ICOs that are coming out, the initial coin offerings. They could easily regulate them into oblivion because they're essentially going around securities registration laws. So If you're talking about what the concept of crypto is as a monetary thing, really Bitcoin's the only one that even has those kind of properties, and to a lesser extent Litecoin. But Bitcoin is only 9 years old, and it's going through its own issues right now. I mean, most people in the space, they don't even realize that Bitcoin is about to go through in the next few weeks a massive, massive test regarding its scaling. I mean, there's going to be an implementation of a new protocol that may or may not be contested. That could be a split into two chains. So right now, this very minute, there's a lot going on, and so it's definitely not. There's definitely not anyone going in and out. The third thing about crypto is it's very hard to buy. So, to move the crypto market, because they're very thin, doesn't take very much, including Bitcoin. I mean, there's really only a few million of float out there. So it moves very, very violently as a result, even with the fact that it has superior liquidity to the others. 99% of the cryptocurrencies you can't even buy with cash. You have to buy in exchanges with Bitcoin or other cryptos. So there's not mass movements. It's just we're talking about that coming off of a smaller base. The movements look bigger. But right now, the movement of Bitcoin to become a global currency is it's in its early stages. I could not be more bullish about it. But the way I viewed it, and the way that I've presented it for the past year and a half, is that it is a ally of precious metals. It is a complementary asset. They both have monetary properties. Gold and silvers go back 5,000 years. Bitcoin is still developing those properties and may one day have them, but they don't have them fully yet. So again, that crypto space is something to be watched, because I believe that it's going to, in time, be the money of the future. But it is in such an early stage right now, and it's still so volatile, that I'm trying to say what's going on in the gold and silver market has nothing to do with what's going on in the crypto market this very second, even if the media likes to portray it that way. And I assure you, if gold has a big move up and crypto goes down, everyone in the precious metal community will say, see, Bitcoin is losing the war to gold. No, they're completely different markets at doing different things at different times. But ultimately, I believe gold and silver will continue to be the storage of value assets they've been for the past 5,000 years. And crypto will have a very bumpy and tumultuous, trek toward being the money of the future, with many winners and a lot more losers. And so again, the two markets I think need to be separated, because I want people to focus, especially in the precious metal community, on what is going on in precious metals. The cartels, unprecedented attacks since, ironically, since Election Day of all times, when Trump became president. And it's the same thing. We have .com valuations in the stock market in a Great Depression world, and there's all this political uncertainty going on and money printing. So I just think you need to keep your eye on the ball in the physical markets, the precious metal markets. If you own physical gold and silver, you're going to be fine. If you don't own them, it's really the time to take a good look at them and to look at the valuation anomalies that I was talking about. I mean, man, we're talking about no premiums on numismatics right now, essentially none. I just bought some 1904 certified gold coins for the same price as a 2017 Gold Eagle. You're not going to see this kind of anomaly much longer.
I wanted to switch over to what is happening in the economy. And you mentioned the jobs report, the ADP report came out, BLS came out. And like you said, they're telling us, well, ADP, they kind of missed expectations, but they're still out there telling us that everything is fine. I mean, even the Fed is out there telling us that the economy is doing well and everything is great. But I mean, when we look at it, we see, retail is imploding, the housing market is having trouble, and we see corporate defaults are on the rise. I mean, when you're looking at all this, I mean, what is your take on what the economy is doing right now?
Well, again, you say even the Fed is saying things are positive. No, that's what the Fed does. It would be amazing if the Fed wasn't doing that, because the second they did that, the whole world blows up.
That is true.
Because the markets would crash. Or maybe they would. Maybe they'd explode because everyone knew the Fed was going to now do QE, which ultimately they're going to have to do. But the fact is, look, I wrote the worst global economy of our lifetimes. I think it was 2 years ago now almost. And it's been much worse. Those are good old times compared to now. We didn't have a retail Armageddon 2 years ago. We didn't have oil prices plunging to where they are right now 2 years ago. We didn't have, the debt compared to where it is. We didn't have Trump in office. We didn't have all these things 2 years ago when I was saying that. I mean, the economic data now is the worst. I mean, look, the last 10 years, even with rigged economic data, the last 10 years of GDP has been the exact same level of, quote, growth as during the 1930s when data was not rigged. And inflation was a lot lower because we had a gold standard. And the last 2 quarters were the worst 2 quarters of the lot. And the data since has been nothing but bad, just declines, plunging auto inventory, plunging auto sales now, plunging retail sales, construction spending, durable goods, you name it. Every data that matters is negative now. Not just here, but everywhere else. So it's as bad as it gets. The Fed is playing this game of chicken simply because of the historic market manipulation I'm talking about. All they care about the stock market. And they figure if we can get away with these tiny little rate hikes at the same time that we massively rig the stock market so it never goes down. And so we can continue to say, yeah, everything's getting better and we're going to tighten. Well, they'll keep doing it. But all that they've done, when you think about it, is again, we're now, 19 months into the so-called tightening cycle. And, again, gold and silver were smashed back in April 2013 when Obama had his closed door meeting with the too big to fail bank CEOs. And the next day, gold and silver, the next 2 days, gold and silver plunged 10%. And that's when the whole, we're going to taper, we're going to tighten, we're going to have an exit strategy for our balance sheet. That all started 4 years ago. And here we are 4 years later, we still have the record high balance sheet. And what does the Fed say? Well, we're thinking about maybe we'll start to unwind it in a tiny amount sometime later in the year, data dependent. So that hasn't changed. Interest rates went from 0% to 1%. And right now, it's so funny about this jobs report. The odds of September rate hike, on Friday, they smashed precious metals and they say, everything's great. The odds of a September rate hike went down on Friday from 18% to 13%. So essentially, we're at 1.1%, like 1.125% is the interest rate. The average for the last 70 years is like 5 or 6%. The only thing that the market is discounting now is another quarter point rate hike in December. And maybe the Fed will do something with its balance sheet at a tiny amount, later in the year. And this is considered tightening in today's world, when the ECB is doing their thing and the Bank of Japan is doing their thing. So again, it's a game of cards. It's a game of if we put every ounce of our manipulative efforts into pushing down gold, into pushing up stocks every day, into pushing up bonds, this move up in bond yield is nothing. I mean, I called the top in the 10-year yield back in January when it was 2.5%. So after this giant run up, it's 2.4% or less. Nothing has really happened in interest rates. And the dollar, by the way, for all the people I've said all along, it's immaterial. The dollar has gotten crushed. It's lower than at any time since Trump got in office, and commodities are lower. So there's nothing positive going on here. It's just a matter of how far can the market manipulation be taken. And again, when you talk about physical markets, things have got to give at some point. Andrew McGuire is talking about how tight the gold market is right now. You think it's not going to get tighter? All of the shortages we've seen in Miles Franklin, with the exception of silver in 2011 at the top, have been because of declines in price, especially when you get these egregious ones that are based on absolutely nothing but the cartel doing their thing, which likely in this case has to do with covering as many of their shorts as possible because they ultimately know where the price has to go. I'm just speculating there. But that's what my mosaic is telling me when I look at all the stuff around me.
Andy, I want to ask you this question, and I know you probably just put your hand to your forehead when Janet Yellen said, that we're not going to see another financial crisis in our lifetime. I mean, when you heard her say this, or you saw it in print, what were you thinking at that point?
I mean, that this is what central bankers do. They say incredibly stupid things, all in the name of cheerleading. Everything is great. Everything is great. Everything is great. The thing is, what's great? What is great in this economy other than the stock market that they support every day? And it's so comical about how, we see now the Bank of Switzerland and Japan tell us we own massive amounts of stocks. And yet no one, even though we have a working group on capital markets here, i.e. the PPT, whose job is to support the stock markets. And the fact that I've been writing about the dead ringer algorithm on the Dow Jones propaganda average for more than 5 years now, which basically shows that the Dow bottoms every day at 10 a.m. Eastern Standard Time, which just happens to be exactly when the Fed does its open market operations. It's completely covert. They don't tell you what they're doing. They just are in there doing whatever they're doing. Of course they are buying the stocks right there. They are trying to support this meme that there's an improvement. But there's no improvement. And the fact is it's gotten to the point where the hard data is showing depression. There's not a single piece of hard data out there, from earnings to sales, to inventories, to construction spending, factory orders, durable goods orders. The only things that are positive are things that are fabricated, like surveys, and even those aren't so great, or things that have to do with government spending, which is not a positive. It just adds to debt and it doesn't add anything. So again, it's all a matter of how far can we push the stock market, how far can we manipulate markets to make this meme, which becomes even more and more obviously ridiculous with each passing day, believable. So, we're heading towards something big. And I'm hoping that what's going on right now is the commercials trying to cover all their shorts, because that's what it appears to be what they're doing.
So we've seen many different indicators, and one of them is being this inverted yield curve in China, and I think it's a flattening yield curve in the U.S. When you hear this and see this, what does this tell you? Again,
flattening yield curve. I mean, there's no better indicator of recession than a flattening yield curve, or even an inverting one. So again, it's like they're telling us on one hand the economy is better and they're going to tighten rates, except the market is betting that rates are not going to be taken higher. And the same goes for the yield curve. They're telling us, oh, look, interest rates have gone up. And it's like, oh, the 10-year yield has gone from 215 to 238. I mean, big deal. When it's, when the average over all these years is like 6 or 7%. But the yield curve is flattening, meaning people are betting that the rates are going to go down. They're betting that there's going to be more quantitative easing. So that's why it gets so comical, where it's like, I mean, can you really force a meme by simply holding the Dow Jones propaganda average up every day, when it's so obvious to the entire world that it's not the case, that there's anything going on that's even slightly bullish for stocks, let alone at the valuations and or bearish for, let's say, precious metals?
Do you think the Fed is actually, when they said they're raising the interest rates and they're going to unwind their balance sheet, and the other central banks are looking to tighten, do you think they're doing all this to prepare for the next recession so they can start stimulus once again? You think this is what this is all about?
No, I think that's kind of a silly one. I mean, it's an easy thing to say because, yeah, of course, when they finally have to admit it, and it's not going to be because of recession, it's going to be because of markets. I mean, we could have GDP down like 20%, but as long as the PPT is able to hold the stock market up, they won't do any QE. In fact, they'll keep saying, yeah, we're going to tighten because, hey, look at this. Look at how good we've gotten at these derivatives. We can actually make the stock market go up with negative 20% GDP. I mean, that's an extreme example, but that's their thinking. I mean, look, if the Fed had to turn around now, whether it's due to a black swan event or just the economy gets so bad, what if oil plunges now from 44 to 30 and there's just massive crashes of junk bonds and all this stuff? If it got that bad and the Fed comes around and says, oh, you know what, we're going to have to start easing, or at least we're not going to raise anymore. And by the way, that's what Rickards is saying, that by the September meeting, that's what he's saying, this is going to happen. I don't know if it's true, but that's what he's saying. And the Fed funds rate at the time they have to say this is 1.125%. You think people are going to be all excited like, oh, this is great. We could take stocks even higher because the Fed has a whole 1% to go down. It's just so stupid that it's just kind of lazy analysis to say that, because believe me, after all these years of telling us everything's great and taking all the valuations of stocks, into the stratosphere and pushing precious metals to the lowest ever inflation adjusted value and claiming that we're going to be tightening rates and tightening policy and all that. And then they have to come around with rates at 1% and say, yeah, we're going to be loosening again. You think everyone will be excited about that? No, they are just trying to kind of kick the can as far as they can with these gradual changes, and more talking about it. Like, well, we're going to do 3 rate hikes. No, maybe it's 2. I'm not sure. To the point is, we're talking about December now is when the next rate hike is expected. And only with the 60% chance. It isn't even like it's 100%. December, 6 months from now, for all the talk about how great things are, and the Fed's funds rate is still just 1%, this is what the expectation is. We will get 1 rate hike to 1 3/8% in December, 6 months from now. And maybe later this year, the Fed will start unwinding its balance sheet to the tune of $10 billion a month, which would be a year, $120 billion on a portfolio of $4.5 trillion. I mean, these don't even count as tightening. They're not even statistically significant, and they may not even happen. And they're way in the future. From a present value standpoint, they're probably worthless anyway. So again, it's all a con game of trying to convince people that that things are better when it's so obvious that they're not. And again, the things that are bad right now, you think they're going to get better? You think retail sales are suddenly going to get better? No, the whole retail Armageddon thing is just starting. I mean, is anyone watching the Whole Foods, Amazon thing? Do they not understand what the ramifications are of this, of all the automation that's coming in because of all the minimum wage jobs that are being lost because of automation and raised minimum wage stuff? I mean, people aren't even going to restaurants anymore. Forget the minimum wage type of things. And the auto bubble, which, you combine the auto bubble and the student loan bubble, they're now bigger than the mortgage bubble was, the subprime mortgage bubble from 2007. They're bigger. And they're starting to implode. It's not like it's a secret that the delinquencies on student loans and auto loans are exploding. So all of a sudden it's going to get better because the stock market is a few percent higher and the 1% of people who own it made some money, and it's not like they're putting it into the economy. The whole thing is just so silly. And that's why, we're talking about a massive, massive reset of the situation is going to occur soon. I mean, this can't go on longer because the economy is going to get worse and the money printing around the world is going to get worse. And there's going to be more and more pressure on central banks to keep doing it. And this is with precious metals at their all-time inflation adjusted lows.
You're saying that, it's eventually going to happen. When do you think it's going to happen? I mean, how much longer can they keep this going the way it is? Because isn't reality going to set in eventually with what's really going on?
Well, the thing is, reality has been setting in quickly. And that's, we're so secular here in the United States. I talk about it all the time. Are 300 million people compared to 7.5 billion around the world. And they don't realize that the average currency has lost half its value since the 2008 crisis. And they're not looking at what's going on in all these countries that are falling apart. I mean, think about the BRICS, right? Goldman Sachs said 10 years ago or 15 years ago they were going to take over the world, right? Well, let's see what's going on in the BRICS. Let's see. Brazil, their currency's fallen, 70%? They've had now the second president in a row is about to be impeached. It's a huge inflation. Everything's falling apart. They're dependent on oil, of all things, which has collapsed. Then you have Russia, who's, their economy's being decimated by oil. India, the war on cash. That thing is falling apart faster than any country right now. China, which is, their economy is clearly the worst it's been forever. They'll admit that, even if they won't say it in their data. Although their 6.5% growth rate of GDP that they publish is the lowest GDP number they published in 30 years, if that could tell you what you're looking at. And then you have South Africa, which is, talk about a currency crashing, and now they just nationalized the mines, and now they're going to expropriate people's land without compensation. And the government's going to nationalize the central bank. Yeah, that's the world. That's where most of the people live in the world, in these places. And you look everywhere. Look at places like Greece and France and Italy and Spain and Turkey and Argentina and Venezuela, Mexico, Canada, everything, all dependent on things that are falling apart, like oil and their current. I mean, it's just an absolute mess, and it's only going to get a lot messier in very soon. All these trends have nowhere to go but down. Nowhere to go but down.
Andy, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work? And you want to hand out your phone number to Miles Franklin?
Yes, Miles Franklin, Precious Metals, in business 28 years without a single registered complaint. We can be reached at 800-822-8080. I write every day for free and do podcasts like this several times a week for free, all at milesfranklin.com, or you can email me at ahoffman@milesfranklin.com.
Andy, once again, thank you very much for being on the Spotlight.
You're very welcome, Dave.